Hey guys, this is week 2 of our series of following Dr. Jim's Theory to Practice Trades on the Tasty Life platform. And we're just going to do a quick review of what the second week of January, or second week of the year of 2024 was, and what trades Dr. Jim did, and look at how that impacts the portfolio overall. Okay, so we'll get started. So for the week, he closed out 2 positions and opened up a new position in JPM. It was an earnings trade. It was a 1 day, and he didn't post the closing trade to the platform, so I had to go out into the video and find it, because luckily Dr. Jim tries to do all of his trades on air, and it's a big bonus for this exercise is that if he forgets to post it, we can at least find it in his videos and get the numbers from that posting and do the calculations from there. Okay, so EMPH he closed out for a winner, and Apple, his bear call spread that he sold actually closed out for a winner because Apple went down during this time period. And the JPM as an earnings play for a expected move butterfly, he tried to pin an area. This one also closed out as a winner, so he's starting off the year great. Okay, so now we'll go to the spreadsheets. Okay, I've marked in orange the trades, the trade entries that I'm doing on the accounting page for this trades. So we'll start off with Apple. Apple, he closed out and made $121.76. I'm estimating what fees would be, since the Tasty platform only shows the credits received as the sale price, but doesn't take into account the fees that go along with those transactions. And roughly, you can say it's $1 plus exchange fees, so it's usually $1.06, $1.07. If you're doing the regular exchanges, the futures are different amounts, but Dr. Jim doesn't really trade futures that often. It's primarily just stocks, so we don't have to worry about that. So it's to open $1.06, and to close it's going to be 6 cents, because they don't charge a fee on closing on trades. Okay, so for Apple, it made $121.76, and he closed it on the 8th. So if I find the Apple transaction and 121.76, and he closed it on the 8th, we can now see that he had 100% return on his capital. So he bought that spread for $117 and sold it for 121. Okay, let's go to the next one. EMPH, he closed that on the 8th as well and made $101. So he initially sold it for $187 and closed it out at over 50% of the value of the credit spread. So it's $101 that he made. So we'll key that one in. Oops, let me look at the 101.76. And that one closed out on the 8th. Okay, so he's in the trade 25 days for that one. He was in the Apple trade for 17 days, so those are good. And then we'll go down to JP Morgan. So JP Morgan, he paid out $254 for the initial spread and was able to close it out for $3.20. Now, if he had closed it out in the morning, soon after close, he would have been almost spot on, and it would have added a couple of dollars to this price. But since he tries to do everything during his show, it had changed by that time, but he still was able to close it out for a profit and made 70 cents. So after that, you net out the fees, it came out to 65.52, which is still not bad. I mean, he picked the right direction. JP Morgan actually moved to almost exactly where he thought it would move to. And if he had closed out in the morning, it's such a big change of dollars for him that he's thinking that maybe he will close it out in the morning, because when you do earnings plays, it's usually the first 15 minutes or so of the market opening that you have a chance to close out your earnings plays at the expected move and stuff after vol collapses. But then after that, the market starts taking over on the stock, and it will start moving back with in sync with the market. If the market's up, more than likely your stock's going to go up, and if the market's down, more than likely it's going to go down in conjunction with the market. You know, they're and that's just the way it is. And on this earnings play, the morning it hit exactly where it should have, but then as the market began moving, he started losing value because it moved away from that center spot of the butterfly. Okay, so I've already keyed this one, and I need to record a 65.52 for the trade. Okay, so we've got the new sales updated on these trades, and now we can go to the dashboard. And as we could see that the capital deployed has fallen a little bit because we've closed out those trades, and since some of those were like debit trades, it wasn't a big change in capital, but still a change in overall. We've now got recorded earnings of $223, and now we can start getting a forecast of what he could make. And right now we're looking at a 5% return just based on the activity that's happened so far. And he's only turned over 2% of his capital. That 0.02 means basically 2%. So as as time progresses, we'll see how much. And so we've also increased the asset balance. So we started at $50,000 even. And he's had gains of $289 total. Okay. And that's about it. And so here's our graphs up, has gone up, but since we're in the early part of the trade, it's not up and to the right, it's almost vertical just because we're starting to establish guidelines of the move. And I've got here for week 2, he made $223. It's a 36% return on capital, which is fantastic for what we're doing. Okay, so we'll close it off from here. Talk to you guys later.